You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we've got a couple of cool interviews, I would say. A couple of folks that I've connected with at the FinTech South conference here in Atlanta, Georgia last week. Both spoke at the conference. One won an award for innovation of a new startup, and I think both have some really great things to share with us. Deidre Campbell of Edelman Smithfield has some really great new data on research on trust in financial institutions, something we've talked about quite a bit, and more broadly, how the trust equation is looking across society more broadly. Great stuff, relevant stuff, I think, for financial institutions and credit unions. We'll be digging into that. And Alex Edquist, the founder of one of the more fascinating startups that I've come across recently called Good Agriculture, dealing with helping with the financial side of running small farms. She was the winner of the Innovation Challenge Startup Award at the conference, and we'll be talking to Alex as well. You can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. Let me mention a date change for you. Our next CU Town Hall, due to some scheduling conflicts, has been bumped up by a week, back a week. I always forget which one's up and which one's back. Wednesday, September 18th is the new date for the next CU Town Hall. I'm actually going to be leading a discussion at that one about the whole notion of primary financial institution status. You know, whether your member truly treats your institution as its go-to financial resource. There's a lot of very kind of murky definitions on how people think about primary financial institution status. And there's some question, given the way the evolution of financial behavior has been running, whether that's even a relevant measure anymore. So we're going to be talking about that. Bring your thoughts to the table. Share your thoughts in advance. We'll love to have a detailed conversation on that. The whole idea, as always, is for an interactive discussion at these. It's a live 1-hour session, takes place on Wednesday afternoons at 3 p.m. Eastern, noon Pacific. It is free to join, but you do need to register in advance. And if you visit the cutownhall.com website, you'll find the way to do that. We'll also post a link to that in our show notes. A couple of news stories this week that I think are worth mentioning before we get to our interviews. If you haven't seen already, it was announced that the Virginia Credit Union League is consolidating. That's the word they use, merging, I guess, might be another one, with the League of Southeastern Credit Unions, which has represented my area here and has already kind of brought together the states of Florida, Georgia, and Alabama. This one kind of caught me off guard. I wasn't seeing that one coming. Maybe I should have, in part because it hopscotches a couple states. I mean, these are not contiguous states anymore. You can look at the map, and depending on how you drive, you might make it going through one or two different states to get from the current base into Virginia. Maybe shouldn't have been quite as surprising if you step back and think about the fact that the head of the Virginia Credit Union League had moved over to America's Credit Unions at the start of this year to become the head of advocacy. So my guess is that probably set the conversations in motion about the best path forward for Virginia, and this is the way that it's going about. All four of those states now, Alabama, Georgia, Florida, Virginia, have in the range of 80 to 100 credit unions each. This is kind of a continuation of some kind of scale economies and moving forward in terms of the way the state credit union representation is working. Interesting, though, in that, to my mind, you've got a pretty darn big kahuna, I guess you would say, about as big as the kahunas get in Virginia in the Navy Federal Credit Union, the biggest credit union in the country, not to mention the third biggest credit union in the country as well in Pentagon Federal. So having those in the mix kind of changes some of the dynamics in my mind, you know, along with some big players that were already there, but not quite to that level. The number 10 credit union already was in Florida, was Suncoast, and you also had ViStar, Delta Community Credit Union, and Space Coast coming up not too far behind that on the large side. But obviously a whole big shift in scale there, and it'll be interesting to watch how that one develops. The other story, and this one goes back and forth, it's so easy to make fun of it and laugh at it, and it's also just incredibly sad. If you haven't seen this already, there was a social media blitz back over Labor Day weekend on TikTok, supposedly identifying a glitch in Chase ATMs and people posting videos of going out and getting quote unquote free money out of the ATMs. This became widespread enough that I'm told it made local news in several places with reporters on the spot picking things up. It was covered by CNN. We'll post a link to that one as well. I've seen it in a few other sources. At the end of the day, it's check fraud. That's all it really is. It's misuse of ATMs and remote deposit for online check kiting. And again, people keep talking. There's always been concern about remote deposits as far as the mobile deposit and taking an image. This was actually putting a check into an ATM machine. So it's a weird one, and I kind of equate it to the Tide Pod challenge of banking because if, in terms of absolute stupidity, as far as social media trends and memes and whatnot, this one kind of falls almost in that same category to me. When you think about it, people are using their own bank accounts. They are taking videos of themselves. They are being filmed by the ATMs when they're doing these transactions. It's not like they're exactly doing this in the cover of darkness. And it's, I'm not sure exactly how extensive it turned out to be, but it was big enough that it was a trend that made the national news. One of the things, again, that I find particularly sad, not only the fact that you've got that level of lack of understanding of the banking system, is this was not a glitch in the system. This is the way the ATMs work. This is the way check fraud works, if you want to talk about criminal endeavors, even if people don't realize that they were engaging in crime. And as we always say, ignorance of the law is no defense. But it actually was exploiting what is a courtesy that's put, and for whatever reason, Chase became the poster child. That was the one, I think, because of the national reach of their ATM network, probably became the easiest way to get people. Everybody can find a Chase ATM, right? I don't know exactly if everyone could, but I've talked to a few other colleagues, and they're like, yeah, my credit union does the same thing. The whole idea is there was a lot of complaints about access to funds and the delay in receiving funds after you deposited a check. Most institutions, not just credit unions, but banks, will allow for you to take out some subset of that to try to allay those concerns. Well, that's exactly the courtesy that this scam was exploiting. I also think it was not a coincidence that it happened over Labor Day weekend. As somebody who was putting this out kind of knew that this was shady. Because that's the way these kind of criminal enterprises work, particularly with ATM machines. The one time that I've been a significant victim of check fraud, credit card fraud. I think I've mentioned this before. It was something that was a breach based on a mortgage application, the first house I bought, and people replicated credit cards, went one by one through the wallet since they had all the information on the credit card, and on different 3-day weekends worked their way down the eastern seaboard, going to ATM machines, taking out cash, on the premise that there was an extra day that they could get away with it before someone was actually going to look at that stuff. So again, this was not just pure naivety. There was, at least at the beginning of people setting this thing up, they knew what was going on. And it's like I say, it's disturbing. Hey, if you're looking for a hack, I've got another one that you may want to try. You go to a store and you take stuff off the shelf, and then you just kind of don't go to the register. You just walk out with it, and you get free product. It's amazing. It's also called shoplifting, but if it's on TikTok, obviously you can do it. So take a picture of yourself, give your photo to everybody, and they can track you down from there. Enough ranting. Let's jump into our interview. Speaking of trust, there we go. Great lead. I hadn't even thought about that. Directly into the conversation about trust with Deidre Campbell from Edelman Smithfield. And let's, rather than just deal with the shady sides of that, let's get into the data behind it. I'm here with Deidre Campbell, the Managing Director for Financial Services at Edelman Smithfield. Deidre, I've been familiar with Edelman. I was not familiar with the Edelman Trust Barometer until you presented on it at FinTech South last week. And since then, I've talked to some folks who really rely on this and look forward to its release every year. So thanks for taking some time. I'd love to kind of get a little bit more into that. Can you say more about the Trust Barometer and how it's used?
Yes, absolutely, Glenn, and thank you for having me. The Edelman Trust Barometer is going on its 25th year. It is the only global research of its kind in 28 countries with 32,000 respondents, measuring trust in business, government, NGOs, and the media. We also sort of divide it into sector cuts. And at Edelman Smithfield, the financial communications boutique inside of Edelman, we bring out the Edelman Trust Barometer for Financial Services, and I'm happy to talk through some of the data that was shared at FinTech South, and we actually had some new data out this morning that I can share with you.
Yeah, and we were just talking about trust at work, which is, I think, obviously a big piece of the equation, not just trust among members and customers, but also people in the workplace. But one of the things we always talk about how important trust is as a valuable asset for financial institutions. You know, your data shows that FIs are doing well on that and actually on an improving trend. What I was a little bit surprised by is we're not necessarily that far ahead of some of the other major areas, sectors of business, education, healthcare, airlines. I was a little bit surprised by that one too. Can you say about how financial services stacks up against other sectors?
Sure, and I'm very pleased to say that financial services has been on a steady uptick in terms of trust since we started measuring trust in 2012. And for the first time ever, we see trust is that financial services is trusted. And that's a global number. But when you start to unpack that number a little bit, you really start to see two stories emerging that in developing countries that financial institutions are very much trusted by their citizens. However, in developed countries, we're in the neutral to distrusted categories. And I think the reason for that is that in developed countries, people are more skeptical. They have higher expectations. Institutions have been around a lot longer, and people generally, when they have economic concerns, they have concerns about their financial institutions. While in developing countries, like financial institutions are still bringing great opportunity. They're bringing banking services that didn't exist. They're bringing Western commercialism to markets and jobs. And so we see much more optimism and trust in financial services in those developing countries.
I would not
Interestingly
have
enough,
I would not have guessed that. That one was really interesting to me when I see the
mhm,
chart. And then you do see that I believe some of the countries that rank the highest on financial institution trust are Brazil, India, China. I believe Indonesia's in there as well. And I'm
yes.
thinking very particularly Brazil and India have had, pretty significant breakthroughs around real-time payments, instant payments, which has improved financial inclusion. And it's thought of as a great innovation that's brought more people into the system. So I'm guessing that's one of the drivers there.
Absolutely, and I think that we are seeing again financial services trusted globally, but when you look at the breakthrough, you see even the UK is the least trusted country when it comes to financial services, and when I say least trusted, I mean least trusted by the respondents in their own country. So really a tragedy there.
That is interesting. And the other cut that, I mean, this one was not as surprising to me, but it's also very good to kind of get this corroborated, is that high income individuals do tend to trust banks more than low income ones. That does run a little bit counter to the logic where I would think it's the low income individuals who were really kind of like rose up through the innovations that took place in some of the developing countries. But that also, for the most part, kind of stands across the different geographies.
Absolutely. And when you think about the experience that people are having with financial services at different economic brackets, at the higher brackets, they're more knowledgeable about the products. They speak more often with their bank managers, their wealth managers. They probably are likely to have more insurance products and be taking advantage of those products in a more active way. Where at the lower income, you go into a community with an aggregate low credit score and you've got the payday lender next to the rent to own next to the liquor store, and I'm quoting John Hope Bryant of Operation Hope, who is an advocate for remedying that situation in those lower income neighborhoods. But how are they going to trust institutions when those institutions aren't giving them a fair shake? It's really across the board.
Makes a lot of sense. And the banking deserts, the branch deserts in those same communities, and that's where the vacuum winds up, unfortunately, being filled. I think that
Hmm.
makes one of the other things that, again, I thought was really interesting. Not only are you looking at the customers' trust in these institutions, but the employees' trust as well. And I was kind of pleasantly surprised to see that financial services employees tend to be among the most kind of positive in terms of trusting the leadership of their organizations. And I guess that also ties to some of the new research you've got out today as well.
It does. And Glenn, you're actually, citing my very favorite stat in the Edelman Trust Barometer. I've been presenting this data for over 10 years, and this number, in terms of the degree to which employees of financial services companies trust their employer to quote unquote do the right thing. That's how the question is phrased. So that number has been unwavering in that period, straight through the pandemic, unwavering in the high 70s and low 80s. And it's amazing to me to think that while the financial services industry comes in as the least trusted sector, the employees of financial services companies trust more than any other sector that we survey. So that's a really important message to employers of financial services companies, because you've got a tremendous amount of brand ambassadors just sort of at your fingertips, trusting and wanting to hear from you, and really wanting to, I think, come to the defense of the industry, because they better know and understand the good work that's being done at fintech and traditional banking across the insurance sectors. When the research that came out this morning was a Edelman Trust Barometer called Trust at Work, and I think the really interesting finding there is that executives trust the mission and the CEO and the direction of the company, while associates, by a very big divide, do not. And we find that the factor that drives trust scores up among those associates is economic optimism. And economic optimism is often coming through providing employees opportunities for upskilling, and in an effort to unlock their own economic potential. And that comes at a time when 1 in 5 in the United States are afraid of AI taking their job. On the flip side, those associates that are more trusting of the workplace are also more active in civic duty. So there are a lot of sort of happy byproducts of a workforce that is trusting of its senior authorities.
That's interesting. And just to clarify that piece about trusted work, you're talking those statistics are across all industries, or is there a split there from a financial services? Did you get to that level of detail?
No, that we don't have that level of detail for the trust at work
Just
research, but generally, yeah,
just clarifying so that we're not speaking specifically of financial services trust, but the broader population. And I want to get back to
correct.
some of the other high level numbers. But you just mentioned artificial intelligence too. One of the things that also caught my eye, I don't think people will be too surprised, areas that are not very heavily trusted, both in the US and I think in both cases, we're among the more skeptical, but across the board in other countries too. AI, crypto, and then one that I think is pretty important as well for our audience, fintech. So you've drawn a distinction between financial services in terms of the more traditional banks and credit unions versus some of these more tech-oriented non-bank firms. Those actually have a pretty significant gap from, compared to how the perception is of the actual financial chartered, licensed, insured financial institutions.
Yeah, absolutely. I mean, the most trusting category, and really sort of trusted globally, trusted by for different demographics, by different incomes, is banks. So traditional banking is certainly, I think there's a real appreciation that banks did a good job coming out of the repair that was done coming out of the financial crisis. And when the pandemic happened and people had to turn to banks, the banks were there with digital products, did a good job managing PPP, and so we saw really a global upswing. Financial technology, on the other hand, is very much distrusted. And in the US, it's not only in the distrusted category, it's down 12 points. So on a 100-point scale, it's at 32
It's
with
going
a
in the wrong
double-digit
direction.
dip, going in the wrong direction. And I think that's sort of, in many ways, it's a communications problem, because you see the innovation that's happening in the fintech industry, you hear the customer stories, but they're not getting out to the broader population. And I think that fintech generally has gotten kind of swept up in the crypto crash,
Yep.
and companies need to do a better job of telling their stories and putting forward case studies and really demonstrating the value that's coming out of the fintech industry.
And one of the things that we're really big champions of here as well is the opportunity for those fintechs to collaborate and partner with financial institutions. So I think that they can, if they can leverage the trust factor of those financial institutions, they can raise their reputations that way, as well as the fact that if there's some really good technology, it means that there's an opportunity for the financial institutions to bring it on board. And
Absolutely.
so that, I think that's a great point too. And I know you haven't done this, but we had a little bit of a discussion before we started recording. You're looking at banks in general. We talk a lot about credit unions. I'm not even getting specifically into credit unions, but just the large institutions versus the smaller ones. I think it would be fascinating at some point to see if you could get any kind of a differentiation about how much people trust the Wellses, the Chases, the B of A's of the world versus the local community institution that doesn't have a national footprint.
Absolutely. It really comes down to the human element. Do you know your banker? Do you have a relationship with your banker? Nobody's giving their money to an investment manager that they don't trust. So
Yeah.
it's really through that human connection. And I know you get a lot of that through a credit union. And so that's an advantage to really lean into. But I wanted to mention, you asked about AI. I wanted to touch on AI for a moment,
Please,
just
please
to
do.
say that while we were talking about financial technology, it's really much the same story for AI, and the concern there is that people are worried about, and this is in the U.S. The numbers are quite high when it comes to they're worried about privacy, they're worried about AI being harmful to people, harmful to society. But if you ask that same group of people, what would increase your enthusiasm for AI? Particularly in the US, they want to see the benefits to society. So again, that's a communications issue. Really, making sure that the innovation is not running ahead of the society's ability to digest, get comfortable with, understand, and build trust. They also want to know that innovation can slow down and take the time to really educate and make people feel more comfortable to partner with regulators in a way that make them feel safer about sort of experimenting with some of these new technologies.
I think that's a great nugget for some of the smaller AI companies that we work with, and we talk about in terms of again partnering with financial institutions. There are ways that this can be very beneficial, and just to make sure that they can put people at ease that the data is being used in the appropriate way. So I think that's a great takeaway. Just kind of wrap things up. If you take the absolute high level, this again was a surprise to me when you look. The headline, I believe, of your report was the decline of authority. And one of the things I noticed was, trust in institutions is down kind of broadly. This surprised me, but business actually ranks higher than governments, NGOs, or the media right now, which is, a little bit troubling. On the other hand, I did feel pretty good about the fact that when you look at individual kind of areas of occupation, scientists and teachers still had the list. Given some of the stories you hear in the press these days, that they tend to be taking their lumps as well. So that made me feel a little bit better. But what any kind of broader sense when we kind of move back above financial services of the takeaways from that standpoint?
I think for me, some of the most jarring data is that establishment leaders are not trusted to tell the truth. Right across the board, at 65%, people believe that government leaders, business leaders, and journalists are purposely trying to mislead people by saying things that they know are false or gross exaggerations. So that's pretty jarring, to think that these leaders are out there on purpose trying to mislead us. However, when you talk about sort of where these economic concerns are coming from, they're telling us they're just as concerned about inflation as they are about nuclear war. So there's a lot of anxiety. But you
Wow.
mentioned the trusted sources in academics, teachers, scientists. CEOs are not trusted, but my CEO is trusted. So again, it's that when you have that personal relationship and understand, and you're not speaking at an aggregate level, that's where the trust building really gets going.
And I'm guessing that kind of is, kind of the same story as I hate Congress, but my congressman's okay.
You got
Same
it.
kind of story. Really, I love this stuff. This is just so fascinating. Deidre, I know that this stuff is available. The Edelman Smithfield website, the best place to find it.
Yep.
Deidre, thanks so much. Really appreciate you taking the time.
Yeah, Glenn, thank you. Thanks for having us.
So, as I said, we've gone into this whole trust equation for some time. I personally do think it's the single greatest asset that financial institutions have, along with, and also equated with the trust is the insurance coverage of people's deposits, which makes them trust that their money is safe. We'll post the link so you can track down more of that information, including the trusted work piece that Deidre mentioned at the end. I also mentioned Alex Edquist from Good Agriculture, a really bright young woman, along with her co-founder, has put together a really interesting solution that I've been thinking a lot about how this would work, particularly with small credit unions in rural areas. I shouldn't say small credit unions, rural credit unions, ones that serve farming communities. I think there's a go-to-market strategy in there yet. I haven't fully thought it through, but have a listen to what Alex is doing with Good Agriculture. Let's give this one some thought. I'm here with Alex Edquist, the founder and CEO of Good Agriculture, fresh off her victory at the Innovation Challenge at FinTech South. Congratulations, Alex. It was a stiff competition. I know you went through the process with 10 other companies in the cohort, took it down to 3 finalists on stage, and you came away holding the big cardboard check.
Yeah. Oh, well, to be clear, it's a Visa debit card. This is fintech, so we are beyond the big paper checks.
I missed that subtlety. Oh man, and Visa's in town. Now they're going to get me. Okay. But anyway, congratulations, and it's good to talk.
Thank you.
I've seen you on stage a few times, and I've always been impressed by the way you've laid it out. And let's just start right there. Can you explain the mission of Good Agriculture and kind of how you got into the space?
Yeah. So just to give the whole story, and it is going to be a little bit of a rabbit hole. I'm going to start by talking about nutrient density and things, and y'all might be wondering how is this pertinent to credit unions? But I'll get there, I promise. So there is a type of agriculture called regenerative agriculture, where the farmer kind of cultivates the whole ecosystem rather than just 1 or 2 cash crops. And the first thing that's cool about this is that the food is a lot more nutrient dense, and it usually avoids some of the issues with chemicals and whatnot that can be in our food system. So I started buying from regenerative farmers very early in my adult life to fix some personal health problems. So I had bad migraines and some other stuff, and just really noticed a difference from eating better food. So that's kind of how I got into the space. But I wasn't working in agriculture. I was working as a management consultant with McKinsey & Company, doing some cool analytics and AI stuff for industries that are not agriculture related. But just kind of as I was buying from these farmers, I started to learn about the environmental benefits of what they were doing too. So regenerative agriculture is much better for the environment. It actually helps sequester carbon into the soil, so it can be a big part of the solution to our climate change crisis, which is also really cool. So, I was already buying from these farmers, but now I got to feel extra good about doing that. And then it was when I was leaving my consulting job that there was some academic research coming out showing that regenerative farmers could also make more money because they save so much on fertilizer and chemicals and a lot of these other big input costs for farmers that they come out making a higher profit. And so I was looking for the next thing to do with the next stage of my career. And I thought to myself, well, the food's healthier, it's better for the environment, and the farmer makes more money, but not very many people are doing this. So that doesn't make any sense. There's a problem to solve here. So I went out and started talking to farmers and asking them, why is this hard? And their answer was basically, everything is hard. I am doing everything by myself. And these regenerative agriculture practices are more time consuming. So even if I wanted to do them, I don't have time. And so I also met my co-founder, Kirsten, who is a farmer, and she's also a data scientist, which is awesome. And, she'd been kind of, working on the same problem. So we decided to team up, and our hypothesis was, if we can take some of these other tasks off the farmer's plate, does that help them, have more time, make more money, and, be able to kind of do the things on the farm they want to do? So we started, basically just offering these services manually to farmers and seeing if they would pay us for it. And they did, and they found it really helpful. So then we kind of have been building the technology along the way. So all that to say, what Good Agriculture's mission is we want to be the back office for farmers. So we really want to be able to tell them, hey, you do the farming and we're going to do the rest.
And I think kind of unsaid in there, which makes sense. I think all of these types of regenerative farms tend to be very small operations. These are not, big industrial farms. So that, like you say, it's a mom and pop shop, and you've got to tend to the fields, but you've also got to deal with the business side of things too. So that's where you're trying to take that burden off of them, right? And it sounds like any small farm would be technically a good candidate for your product. You're just kind of focusing on that regenerative piece at first.
So we don't go to market strictly to help regenerative farmers. We go out there and we try to sell to all farmers. But what we found is farmers, they get sold to a lot, and so they're kind of a skeptical bunch. And so a lot of them will meet them and they'll be like, okay, I can see the value of this, but you're also a brand new startup and I don't think you're a real company yet. So like come back in a couple of years. And it's really those farmers who are already farming regeneratively that are like, I am so desperate for the help here that I don't care that you're a brand new company. Like, please, sign me up.
So they're
Um,
kind of, yeah, they're more receptive to the offer. Also,
yeah.
just from what I understand, from what I heard from you before, the young, this group skews toward first generation farmers and younger farmers as well.
Yeah, so we definitely work with more first generation farmers. I wouldn't necessarily say we work with younger farmers because we have farmers that are like all over the age, cohort, but that first generation farmer, like, they haven't inherited something from family. They're trying to start something from scratch. And so that's obviously harder to do. And so again, they kind of need more help there.
I think you also mentioned, though, if you got a farm that's about to be turned over, and if the younger generation's a bit more tech savvy and they're just kind of getting a shoebox full of papers, this may be a good opportunity to kind of turn it into a somewhat more of an automated solution.
Yeah, yeah, we get that from farmers sometimes like, "Hey, I'm, a year or 2 from retiring. I don't wanna hand over a mess. Can you clean up the mess before I pass it down?" So we get that sometimes, which is fun.
So again, the value proposition, and as I understand it, maybe this is a good way to get into it. You've got kind of two products out there. One is the kind of looking for grants that are available in the market, and then
Mhm.
the other is kind of the ongoing back office support that's more of a recurring revenue monthly fee, correct?
Yep, that's exactly it.
So can you talk a little bit about the two of those? I mean, I think you mentioned right now the grant piece is, I don't want to call it the loss leader, but that's where you're getting most of the attention. People learn about you, and then hopefully they get more embedded with the broader solution.
Yeah. So, one thing that's interesting about the agriculture space is we think there's $11 billion a year of grants and government programs, carbon credits, and just money that's out there for farmers trying to help them, farm in a more sustainable manner or pursue any other set of goals. But it's a very fragmented landscape. It's going to be very hard for farmers to navigate. So our first product is a matching tool that actually finds all these opportunities, figures out what the eligibility criteria are, and then alerts the farmers who are eligible for these things like, hey, here's an opportunity for you, and it just opened. And then for the folks who want our help actually applying to these things, because the paperwork can be a real burden, we have another tool that does the applications for them as well.
So you'll identify the opportunities for free, and then if they want help with the application process, then that's a one-time charge.
That's correct. And so we do identify them for free, but if the farmer wants us to monitor all the deadlines and like alert them when they open, then that's a really small subscription. So we charge $3 a month for that.
Free a month. Okay. And then on the other side, when you're actually doing the books for them, that's a broader offering and obviously a higher priced offering, but still lower than I would have expected.
Yeah. So I mean, we are a sneaky software company. So to the farmer, it looks like we're just a manual service provider, but really there's software in the background doing most of the work. The farmer doesn't have to interact with the software because we know that farmers have enough on their plate. They don't need to figure out another software product on top of everything else. But all the software in the background lets us offer this at rates that are affordable for most farmers. So we're like 20% of the cost of most bookkeepers.
Yeah, I'm just thinking from personal experience. I know that behind the scenes, my tax person uses TurboTax, and I see that and go, "Well, geez, I could have used TurboTax." Yeah, but I didn't. I got to
Yeah.
use an expert that actually can walk through it. But you also, this came up, I think, as one of the questions on the stage when you were answering the judges' questions. QuickBooks. I mean, in theory, QuickBooks would be a competitor, but there's nuances to farming, and they don't necessarily want to learn QuickBooks either, right?
Yeah. I mean, QuickBooks, I mean, and to be honest, like our product's built on top of QuickBooks, like it's great accounting software. But, if we're asking the farmer to like go in there every month, figure out how to use QuickBooks, figure out how to keep all their books updated, like most farmers just don't want to do that. There is like 10% of farmers that just really love spreadsheets and numbers and like they like QuickBooks, but most of them are just like this is overwhelming. I don't have time to figure this out every month.
Yeah, I think you said your biggest competition is really pen and paper. I mean, they're just
Yeah.
going back to the ledger back in their office, right?
Yes, exactly. That's what most farmers are using today. And it's you just don't get any insights out of that. Like it's very hard to, run a business in today's environment when you're only working off of pen and paper.
So how do you go about creating awareness? How are you finding your likely prospect, or how are they finding you more appropriately?
Yeah. So, and this is finally where we get to talk about banks and credit unions. But so we do just sell to farmers one by one. So we meet them at conferences. We'll host educational events for farmers. They'll just Google grants for farmers and they'll find our website and we meet them that way. But half of our financial management customers actually are partner referrals. So one common use case is we work with lenders, and the lenders will frequently get a farmer who comes to them and needs a loan. And the lender will say, okay, cool, here's the application. And then the farmer will be like, what is a balance sheet? And the farmer will have, their shoebox full of receipts, and they'll try to bring that to the bank and say, like, hey, can you give me a loan based off this? And then, the banks don't really want to sit down and like go through all of that. So what they'll do is they'll call us. We will, get the farmer's finances set up and then send the lender a clean set of books. And then that way, they save time, the farmer gets their loan, we get a customer, kind of everyone's happy.
So I think you said that lenders tend to be about half of your partner referrals. Is it other kind of farming community groups, or how else are you getting to people?
Yeah, so we also work with farm consultants, so folks who they want to be focused on like the fun strategic work and not necessarily the day-to-day getting the farmer's book straight. We also work with nonprofits, so we'll collaborate on a lot of educational events with them. We also help some folks with their impact tracking, because obviously we have all this great data on farmers and can tell them like your farmers are this much more financially well off because of you. So yeah, that's kind of what our partners look like today. But we're still an early stage company, and we're still kind of figuring out where we can add the most value in this ecosystem. So I have a lot of hypotheses about what we can do, but nothing beats actually talking to folks about what their challenges are.
And I guess one of those tests, I think the first time I saw you was at a credit union day here in Atlanta. We did at the ATDC at Georgia Tech, and you
Hmm.
were kind of presenting your idea to a group of credit unions. Now, the one thing that comes to my mind again, it's a you have to have a concentration of farmers in your portfolio.
Hmm.
So
Hmm.
you're talking probably for the most part, rural, smaller community banks, credit unions, things like how do you go about, I mean, how much critical mass do you think a bank or a credit union needs to have with these types of clients or prospects for it to be kind of worth their mind share to kind of put this in part as part of their toolkit?
Yeah, I would say any bank or credit union that is doing farm loans, so like helping farmers actually purchase farmland, doing the operating loans, like get up and running with the equipment and the infrastructure and stuff like that. That's really our bread and butter. I mean, what we see when we do some of these events, especially around Atlanta, is the credit unions are like, "This is cool. We don't work with any farmers. We don't do farm
Yeah.
loans, so we can't work with you, but like keep it up." Yeah, so I mean, anyone who's doing farm loans, like, we'd love to talk to them.
Do you have any kind of geographic, I mean, obviously you're based here in Atlanta. I believe your co-founder is as well.
Yes.
Have you found traction in other certain geographies that's been stronger, and anything you can attribute that to?
Yeah, what's been interesting is so we're only in the US, but we are all over the US. Like we don't really have a geographic concentration, nor do we have a concentration in any particular type of crop or livestock or other farm product. Um, our farmers have been super diverse, and we've been able to prove that the product works no matter where you are and what you're growing. So that has been fun for us. But on the flip side, it makes it harder to identify, like okay, we're getting a ton of farmers from Illinois. Like, let's figure out what's driving that and who else we can work with in that state to really, really grow what we're doing.
Like you say, early days, but really interesting days too. I mean, you're still
Yeah.
a pretty small operation. I mean, how many of you are there now?
5.5 of us.
5.5. Okay. So if people want to find out more, goodagriculture.com, best place to go?
Yeah, that's easy. And then you can also reach out to me. I'm Alex at goodagriculture.com.
So great. I really enjoyed talking to you. I've really enjoyed seeing your presentation, and I'm sure we're going to be seeing more from this as well. So Alex, thanks so much for taking the time. Congratulations again on the Innovation Challenge win.
Thank you so much. It was great to talk to you again, Glenn.
And again, we'll have some information there, website you can follow, etc., links. Always encourage you to check out the links to our show notes. In our show notes, you can find those at the Best Innovation Group website, big-fintech.com. If you are listening, you may have found them already if you're sitting on our website and listening to this through the widget there. Of course, you can always find our content as well, and all the usual suspects, Amazon's website, Apple Music, Spotify, etc. And if you are so inclined, we'd always like it if you'd like us, follow us, so you know when the new content comes up. We're putting out new content pretty much every Tuesday. Speaking of which, if you're listening to this right when it comes out, I will be at the Finovate conference in New York City, which is always one of my favorite shows of the year, and also the place that, because I get to see about 60 new products demoed on stage in rapid succession, managed to track down a lot of interesting people to talk to. So if you check in next week, that's probably what you're going to be hearing here on the Bigcast with the latest that we found of interest in the new developments in the fintech space. Some from companies you haven't heard of, some new ideas and new developments from ones that maybe you have. And that's the fun of the thing. Again, my name is Glenn Sarvati. You can track me down via my firm 154 Advisors on Twitter, on Blue Sky. If you want to call it X, you can find it there too. Or LinkedIn. You can also find the Best Innovation Group and our Grand Poobah John Best. The X handles at Big FinTech, or for John Best directly at JB FinTech. And again, LinkedIn for both of them as well. As I said, love to hear from you. Hope you'll join us again. New content, and specifically around the Finovate stuff coming up next week. Until then, thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.